Good Monday morning, September 26th. Alright guys, let's jump right into the pre-market prep. Want to try and make these just short and sweet, but I also want you guys to get the knowledge and understanding and learning of how we're finding what we're finding. Alright, so where is my... I set it up on another one. I wanted to go out to the weekly chart with you guys this morning, but I don't have it set up here yet, so I want to keep it quick. Alright, let's start out on the daily chart. You know what? I actually want to start out on Thinkorswim this morning to show you what I'm seeing. Alright, on the 1 hour chart, what do we see right here, guys? Notice how the RSI is making consistently higher highs, right? Price action is also, but so is our projection oscillator, right? Now let's jump out here on the weekly. I only got a 3-year, 3-week, but that's all right. I don't want it that big. All right, so on this 3-year, 3-week, the weekly chart, I'm going to call it. All right, we have a massive engulfing bar, a red engulfing bar with follow through, right? Now remember, we are in a major area of support here. So that's one thing you want to keep on the back of your mind, all right? Is we're in a major support level. So typically what's going to like to happen is what you see right here, all right? And what you see right here. And what you see right here. Okay, what you see right here, right? We had it, an outside engulfing bar. We came down to a level of support. The next week, we rised all week, right? Same thing here, same thing here, same thing here, right? Remember, these are weekly bars, okay? So now that we are in a major area, right? A major area. Again, say it with me. A major area of support. Now, this area, though, this is unlike other major areas, right? You know, the economy's not doing good. There's so much stuff going on in the world. Inflation, the Fed's speaking again, just being aggressive on the interest rate hikes. You know, it's another good, you know, I don't know. I don't want to say the wrong thing. I know what I want to say, but I don't know how to say it. You have to be careful, even though we're in a major area of support. You know, the market is undecided right now of what it wants to do. You know, so you would expect us to get a nice bounce in this area, but again, everything out there just isn't convincing me that we're going to see a straight up movement, right? Again, in June, we still haven't fully reached the June lows, okay, which are down here at 11,130. We still haven't reached the full potential of this down move, okay? So it is what they call Money Monday, right? It's the last week of the month, and the last week of the month is when people like to balance their books, right? The market likes to go up high so everybody could show great end of the month profits, right? So again, it's anyone's game right now. It really is. This is kind of like one of those times where, you know, you don't really know what's going to happen, right? Typically, you can predict what's going to happen, but it's just one of those times where this is really a wait and see kind of area. Once we break this area, all right, game back on, right? We're going down, right? Once we break, if we come up here and retest this zone, right, we had this nice triangle formation and we broke to the downside. But again, it's not like other triangle formations, right? We have a major area below us. All right, guys? So with that said, let's get into the pre-market game plan as normal. All right, we are on the daily. All right, so what do we got here? Again, this is all for the 30-day boot camp. It's been great. Everything's been appearing within the last few days. You guys are going to I'm telling you, this 30-day boot camp is going to change your life. It literally is. Those of you who are really wanting to become professional traders, I'm making it that it will enable fifth graders to become consistently profitable after 30 days. And it's jam packed. It's going to be jam packed with everything: chart patterns, time frames, entries, exits. I mean, you name it, it's going to have it. It's going to be better than any course that has ever been offered to the public. I'll tell you that right now. It's going to be better than any single course out there. All right, guys. So why is this? There we go. Let's remove that. So just kind of ignore these things for now, okay? All right, the hourly, again, this still stands as support. Everything else is still good on the hourly from last week. Let's go down to the 30-minute, check out the overnight price action. I'm just trying to get those lines to come up. I'm not sure why. I didn't have a chance to contact them yet. All right, this morning had a beautiful trade, and I'll cover that here in a minute. So what I see right off the bat, right, we had this triangle. We had a massive breakout bar. Now, this is a 30-minute chart, so you're really not looking for the major follow-through, right? That happened down here on the lower time frames. But with a 30-minute chart, all right, we broke out to the upside. So if we were to draw this trend channel, right, we came down, and now are we going to shoot back up, right? 30-minute time frame is like no other time frame. Everything I'm going to be teaching you guys, especially in that boot camp, man, I'm telling you where to look for your patterns, right? Your best patterns are going to play out on your higher time frames. And that's when you come down to these lower time frames to find your entries, right? Oh, I'm just like so super psyched for this boot camp, and it's coming out so awesome. Oh, thank you, Jesus. It's awesome. It's awesome, awesome. All right, so what are we looking at here? All right, we have an area of support down here. We already broke through the triangle slash... No, it's a triangle. Now let's jump down. Let's mark off. You know what? I didn't even check the economic calendar, guys. I know there's nothing major on it today. YouTube. Why am I going to YouTube? My fault. I'm getting ahead of myself. Alright, so what's up on deck for today? Yeah, we don't really have much on today. We got the bill auctions, that's about it. Not really going to do anything to move the market. Tomorrow we got some news, right? We got the non-defense durable goods month over month. And then later on in the day we got Fed chair. I thought one of the Feds was speaking. What's his name? Yeah, no. Fed Bullard speech. I call him Ballard for some reason. I don't know why. But that's tomorrow. Nothing to worry about today. I mean, I'm gonna set my alarms, which will bring it up right here. And it'll notify me, and it'll tell me whether it was good or bad. My FX book, I love it. I want you all to get it. Alright, so nothing really major on the economic calendar. But let's go ahead and mark off our areas. Same thing every single day. There's one. Two. And three. And we got a lot of double bottoms here too, and double tops, so. Alright, gonna color these in green, as always, because these are areas of support. I hope you all know that by now. Hope you've been watching these videos. Now let's mark off our overhead resistance. I'm gonna bring it down to here. Notice if we bring it over here, it's all of yesterday's price action as well. And we'll get down to the lower time frame. But as of now, this is going to be our most important area. I'm not going to really nickel and dime it here. All right, so we got our pre-market high and our pre-market low. This was yesterday, which could be considered in the pre-market from Sunday's trading. Now we're going to go to Friday's close. So we're looking for 4 p.m. That's 4 a.m. Wow, is it this close? Is this Friday's price action? Alright, cool. So it's kind of right up in our overnight support. Gonna mark that off yellow. Friday's close is yellow. Alright, and even Friday, I want us to start marking off the highs of the previous day now that we're out of that weird kind of week. So we got Friday's high, Friday's low, Friday's close. We got overnight low, overnight high, and another area of support. All right? I'm going to do Friday's close blue. And you know what? You just like to know what you're looking at without going back or without writing it down. So the previous day's high and low, we're going to mark off with blue. Let's jump down to our 15-minute and see if there's anything hidden that we might have missed on the higher time frames. We got Friday's high, Friday's low, Friday's close. We got pre-market. Now this here, let's bring this right up here, because now the candles look a little bit different. This looks good. This one here, we're going to move down to here. Looks good. I'm going to go ahead and add another line. Right here. But notice on this 15-minute time frame, we got a rising 20, right? But right now, it's really not a good time to, well, let me just keep going. We're not trading. We're doing pre-market prep. All right, let's jump down to the 2-minute time frame. So what do we know? What do we see? What do we got going on? All right. Right now we have a gap to fill from Friday's close. We have a gap to fill from Friday's close. All right. So Friday's close is the yellow line. We have this gap to fill. All right. Looks like it's not truly a double bottom. But remember, the RSI and the oscillator projection from Thinkorswim, all right, it is kind of grinding up, right? Let's go back to the hourly on this one. I like to keep this on the hourly chart because I like to watch my hourly candle bars. But notice we're grinding up, right? We're grinding up, but we also are here, so that's really not a confirmation, but just something to keep in the back of your mind, right? So higher probability trade is going to be to fill this gap, right? Overnight inventory, you know, we're not 100% net short. If we were 100% net short, means we're trading down below all the lows, or we're at or near all the lows of the overnight session. And we're not quite there yet. Okay, so we got the gap to fill above us. So the higher probability is going to be to the upside, right? Most likely going to fill that gap, especially looking at the pre-market. Pre-market. Notice, what would we like to call this, guys? This would be called a wide range, WR, right? Okay, from here to here. So on the wide range like that, you really don't want to On a wide range like this, you'd want to do your no trade zone. I really don't, this drives me nuts with this thing. I don't know if I hit it all the time to be that big or what. But your no trade zone, the way you do your no trade zones is you kind of look for areas where it turned around and areas where it bounced at, okay? And you make your no trade zone right within that area. All right, so this here is now officially the no trade zone. Okay, and notice where all the choppy price action happened, right? Again, this is all about becoming consistently profitable. This is about keeping your losses to a minimum, okay? That's the name of this game, right? So we got our no trade zone. Let's just say you traded in here, right? This is just so much choppiness, right? Now, if you're trading outside of this area, already your probabilities are 90% higher than trading in this area, right? The probabilities of reversals of trading outside this area are way better than the probabilities in this area, right? So stay away from the non-high probability areas, okay? Don't trade those areas, right? You want to look for areas where it's a higher probability, where you're going to have better overall odds of taking a trade and making money, right? You don't want to just jump into any trade. But here, with your stop losses, you have a much higher probability of it not taking you out than you do in this area. Because in this area, you know, they love hunting those stops, right? But once the market is overextended, right? When the market is overextended in a specific location, those are high probability trades, right? Does that mean you're not going to get a rip through? No, that doesn't mean it, okay? But you're looking for odds, okay? What are the odds of going long here, right? If you took a long here, what are the odds of it coming back up to this area? In this zone, your odds are literally like 50-50, right? Especially in the middle of a range, right? Your odds are 50-50. So why would you even take that trade? Okay, it's a no-brainer. It's a no-brainer. I'll say it again. It's a no-brainer. The odds are not in your favor. Okay? So look at how beautifully this reacts to the lines that we draw, right? The support and resistance, right? Look at the box that we drew, right? And we could have drew this early this morning, right? We could have drew this right in this area. We already had, this was from Friday, but where's Sunday? Where's Sunday? Here, okay? We could have marked off, we would have marked this off from Friday. We would have marked this off from Friday. And then we started trading, right? So we could have marked this off on Sunday, this off today. And again, we have a range. So the only difference with that would have been is our range would have then been down in this area. This would have been our no trade zone for that time period, right? And again, the odds of winning a trade in this area are 50-50, right? So why would you take a trade with a 50% chance of losing it? Now, once you get experienced and you know what you're looking for, right? What I like to call, what's my favorite motive? What is my favorite strategy to use? Areas of liquidity, right? Right here, you have an area of liquidity, okay? You had your entry bar. No, that's actually my bad. It's not. I would not have taken that trade because your entry bar wouldn't have been here. When it was squished up like this, it looked a lot better than when I opened it. So excuse me. But again, that's exactly why this area is giving you a 50% chance of being right. And those odds are terrible, right? The areas outside of here are the areas of high probability setups. Now let's just look at this. All right. I just erased it again. So anyhow, This year, would you have taken this trade to the upside? Absolutely not, right? Big bar coming up, breaking it, big bar, but where are we, right? Where are we? With 3 big bars in a row, you're not taking that trade. I would hope you're not taking that trade, okay? Because the higher probability is a fall back to the downside, right? That would be the better trade to be on. But once it comes back in, it meanders around, right? Now these trades are really good, okay? Enough teaching. Let's go. Sorry. I always get so caught up because I love teaching and doing what I do. So, pre-market game plan. High probability trade is going to be to the upside today. All right, I'd be looking to fill this gap. Again, notice that we've made several attempts. So the market's undecided right now. Again, we're in a wide range. Okay, wide ranges are good to play just like it is. You buy at the bottom, you sell at the top, right? Those are wide ranges. So depending on what the market does overnight, again, looking at Thinkorswim, I'm thinking the higher probability trade is probably going to be to the upside. Okay, if you look at my hourly on Thinkorswim, notice I had this trend channel. We broke it. We tested. We came down again. All right. That's what I'm thinking in the back of my mind. But again, you really want to be patient. You don't want to go buy 400 contracts to the long side. All right. This is a type of market where you want to be with a smaller position size until we really get that definitive, up or down direction, which we don't have right now. All right. But again, today I would be looking to be a buyer. All right. So with that said, guys, just use caution. If we get up in this area, all right, you're looking for that 1, 2. And again, we're still kind of hanging around this area to the downside. So you want that 1, 2. Until we break out of this range, until we break out of that range, guys, you're only looking to trade the range, right? Once we break out of it, the market's going to tell you where it wants to go, all right? I don't have... we have the downsides already marked off. You guys, if you're paying attention and marked them off with me last week, you know where it wants to go to the upside. You know where it wants to go to the downside. But again, right now we're just kind of ranging, all right? But again, it's one of those times where the continuation from last week into this week is to be cautious, all right? Don't get any crazy trades. What I'm seeing this morning is most of these trades are working today, which is why I'm a little more convinced that we're going to go to the upside today. All right, we had a nice green bar here out of an area of liquidity. That would have been a beautiful trade. Right here, we had, we're getting follow through today. All right, area of liquidity, boom, entry bar, stop loss just below it. Right, take profit. Where's your take profit? Look to the left. Here's your left. Here's your left. I think. Yeah, this was the opening range this morning. This is where I traded this morning. All right, beautiful setup, right? I took my profit up here. Then we had another area of liquidity, entry bar, stop, boom, boom, take profit. So as of today, what should happen is happening, which is why I'm a little more convinced, all right, that we're going to see some upside potential today. We could see a major move. I don't know, right? All I would do is trade what I see when I see it. Again, the ultimate goal here, guys, today is let's fill this gap, right? If we fill this gap to the upside, do we break through it, come back and retest it, and continue our journey? All right, if we're going to see a really strong move, what do we want? We want a really nice tight channel, hugging the left side of that channel, barely pulling back. On the 20, this is a picture perfect area of strength. Notice the price didn't even come back to the 20, right? That's what you're looking for. When I'm talking about tight channels, right, that's what I'm talking about right there. Okay? High probability, high, super high, 95% probability trade that you're getting follow through even more after the 200 we made here. Why? Because look at your 20. All right? Price never even came back. Never even came back. Right? That's what I'm talking about when I'm talking about tight channels to the upside, okay? You don't want to see channels like this, okay? When you see channels like this, all right? And this one's really not even that wide. This could be considered, somewhat, as long as you had more green follow through, it could be considered a tight channel as well. What you want to stay away from is channels that look like this, right? Those are the ones you want to stay away from. And we'll be discussing all that going forward. So channels you're looking for out of breaks to the upside or the downside are channels that look identical to this, where we don't even come back to the 20, right? Price never came back to the 20. Never came back to that 20. All right? Look at all that space between the pullback to the 20 and the next rocket fuel, right? All right, guys, so God bless. That's pre-market prep for today. Have a great day trading. Again, I'm not really looking to trade too much. I'm focusing on a 30-day boot camp. And then next week, we're going to start trading live together with the demo account only. 30 days demo account. 30 days demo account. So if you haven't funded your account yet, it's okay. You're going to have some time. I planned on only doing like 1 or 2 weeks with the demo account. But the more I thought about it, I want you all 100% familiarized with the platform. I want you guys somewhat familiarized with what I'm teaching you. So let's do 30 days of paper trading. All right? And we'll talk more about that later, guys. Have a great day. Be careful, right? Let the market tell you what it wants to do. You don't tell the market what you think it should do, right? All right, guys. God bless. Have a great one.